Good morning. Welcome to Stock Market. Today it's Tuesday, August 27th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where you can follow along with this show, get daily stock ideas for you to consider. Hits your inbox every trading day before the market opens. So U.S. equities finished higher in quiet Monday's trading. Treasuries were slightly weaker across the curve, and the 210 spread spent much of the session slightly inverted. Dollar was stronger on the major crosses. Gold finished down slightly. WTI crude reversed pre-market strength to finish down 1% on the day. Your outperforming sectors, comm services, tech, utilities, and staples. Your underperformers were materials, energy, industrials, and healthcare. We'll note that all sectors did finish higher on the day. As we get to the desk this morning, futures are up about 10 basis points after that move higher yesterday. Asian equities were higher overnight, with China and Japan outperforming. European equities are mixed this morning. Treasuries are stronger across the curve. The dollar is weaker versus the yen, and little changed against the euro. Gold up 20 basis points, and WTI crude is up 1% after that 1% drop yesterday. So let's take a look at the chart here. Not a ton change other than we rebounded from support once again, really solidifying that 2830 to 2850 area as near-term support. We've identified the zone as 2800 to 2850, and we note that the 200-day moving average continues to creep higher in that support zone, 200-day at about 2803. Resistance in the area between 2900 and 2950. RSI remains below 50. That remains one of our biggest concerns from a momentum standpoint, right? And something that we're keeping an eye on as we run through our scenario analysis, as we update our probabilities day in and day out. If the market continues to rally and those rallies are met with the RSI not breaking above 50, that would be a concern for us, especially if support then gives way. Right, that would just open the door to 2730 on the downside, which I think the door is open to that if we break 2800. I think if we break 2800, I think we have a straight shot down to 2730. RSI, biggest concern for us right now from our indicator standpoint. Chaikin money flow is bullish and looks to be stabilizing. So the indicators are mixed. Support and resistance are well defined at this point. And for all the back and forth, for all the headlines, for all the tweets, we're still in this range, right? You can get yourself pretty chopped up, whipping your portfolio around based on the latest trade headlines and latest tweets. It pays to stick to a process, know your levels, know what you're going to do before it happens. Run through the scenario analysis. That's what we're trying to help you with here every day. Your market in a minute. What am I writing about today? Well, it's Tuesday. It's relative strength day, so we're looking at our sectors across the board. The S&P 500 rebounds from support. Trade headlines continue to dominate market movements, right? Key reason for the bounce yesterday was President Trump coming out and saying that China was looking to negotiate. These headlines are going to be with us. They are going to cause volatility to remain elevated. Know your process, because while the market's chopping, there are groups that are leading, there are groups that are lagging, and there are opportunities across the board. Defensive sectors remain in strong relative trends, while energy weakness persists. Futures, as we said, do point to a slightly higher open today. Let's take a look at the power bars. A little bit of an uptick for the Dow yesterday, up 82 basis points, 2 bulls to 9 bears. Remember, yesterday morning, there were 0 bulls. S&P 500, 69 to 111. Bulls to bears after an 81 basis point rise yesterday. NASDAQ outperforms, but power bar ratio still skewed bearishly, 27 to 21, bears to bulls. Small caps, an inline performer, 337 to 381, bears to bulls. Bond slight downtick. Comm services was your big leading group, and this is a group that's kind of interesting to me because it has those offensive and defensive properties after its reconstitution just about a year ago. 8 bullish or very bullish stocks, 3 bearish or very bearish stocks after a 1.21% rise yesterday. According to the Chaikin Power Bar, small cap stocks, large cap stocks are somewhat bearish. Major markets are mixed. Let's look at our stock of the day now. This is one that's in the news. BristolMyers. BristolMyers up 3.18% yesterday, part of the drug group, which is not a great industry group. BMY, the ticker symbol, has a very bullish power gauge rating due to very strong earnings performance, very strong price volume activity, attractive financial metrics, negative expert activity, however. But when we take the 20 factors, 5 in each of these 4 categories, we come out with a very bullish power gauge rating. Strong trend as we are above and now rising long-term trend line. But as we said, the drug group has been a weak industry group. Let's take a look at the chart. Let's run through the analysis. You can clearly see the bag is mixed bag in this environment. We're going to hold off. Bullish rating, still underperforming, but we will note that the intensity of that underperformance has been dampening of late. Money flow has turned bullish. Middle of the road here for the overbought, oversold indicator. So BristolMyers looks interesting to me. I'm certainly going to keep an eye on it in the days and weeks ahead, because if this relative strength starts to tick above 50, indicating that the stock is outperforming, then this really looks compelling to me, because we have a stock that was in a steady downtrend that now looks to be stabilizing, beginning to move higher. But in this environment, we've been talking about wanting to wait for premium setups. This is not premium yet, but we want to add it to a watch list, because if it does become premium, all of a sudden this name becomes really interesting. Our sector tracker now, looking at the movement of the major sectors over the last 5 days. Only one group higher over the past 5 days, and that is utilities. Utilities has been strong on an absolute and a relative basis. Defensive rotation on the part of investors, falling yields driving the utility strength of late. Discretionary roughly flat, some positive responses to retail earnings last week driving trade there. Real estate continues to outperform, even though it is down on an absolute basis. It's been an outperformer over the past 5 days, largely, again, due to defensive properties as well as falling yields. Defensive properties help staples to outperform. Middle of the road, tech fins and industrials, comms down 2%, but that group, like I said, is looking interesting to me. Healthcare, trying to consolidate. If you read my note today, still in a relative downtrend, but looking to consolidate. Materials coming under pressure as strength in precious metals is just being overdone by the rest of the group, and energy just continues to underperform, and it really underperforms across time frames. I look at it from a trend perspective in my note today, clear downtrend. I look at it as on a shorter term relative rotation perspective, clear underperformer. Group has 0, count them, 0 bullish or very bullish stocks based on our model. Just continues to be a group that we want to avoid. We'll take a closer look in just a little bit. Speaking of defensive areas of the market, Dow Jones REIT Services is our industry in focus today. Over the past 6 months, it's been an outperformer, outperforming the S&P 500 by 1.86%. Power bar ratio, which measures future potential, is strong. 14 bullish stocks for 10 bearish stocks. Ranked number 6 of 21 subsectors, and you notice it's moved up 3 slots over the past week. Some of the indicative names there that you don't necessarily want to go out and buy, but you want to do the work potentially. Keep an eye on them. CBL Associates, Apple Hospitality, APLE, and Retail Opportunity, ROIC, all have very bullish Chaikin power gauge ratings within that industry group. So let's take a look at RWR, the SPDR Dow Jones REIT Fund. Bullish Chaikin power gauge ETF rating and a strong trend above a rising long-term trend line. Outperforming the market, bullish rating outperforming. Same type analysis that we do with the equities, we can do with our ETFs. So clearly this is a group where you want to focus for long ideas. If you're looking at the fund, I'd say it's a little bit of a wait, because the overbought oversold indicator is now rounding out of an overbought condition. But Chaikin money flow has been persistently bullish since November and remains strongly bullish. So REITs obviously an area of the market where we want to focus. I think the issue you've had here is that a lot of the stocks within the group are overbought at this time. Again, defensive properties in the marketplace, yield play. Taking a look at what's trending now. Yesterday's S&P 500 gainers and losers. Foot Locker rebounds after a nearly 19% drop on Friday. FTI up 4%. No real news there. Same with CenturyLink, up 3.4%. Didn't see any real news. There's your BristolMyers up 3% as Otezla is being sold to Amgen as part of the deal for BristolMyers and Celgene. Some assets being sold. Amgen traded higher on that news as well. So Amgen takes Otezla, which is a drug that is being divested by BMY Celgene, who are combining. So a lot of moving parts there. led to BMY and Amgen trading higher. Alexion actually traded lower on that news. Philip Morris continues to trade lower. India potentially banning e-cigarettes. There's also a rumor that Philip Morris might be buying Altria, and there was some chatter that Philip Morris dropped out of a sell-side conference. That always kind of catches people's attention when a company is scheduled to present at a conference and then they cancel. People wonder what's going on. So a lot of moving parts there to the Philip Morris story. L Brands following through to the downside, down 3%. Same with the Gap, following through to the downside, down nearly 3%. DD didn't see any news to drive that stock lower by 2.75% on the day yesterday. So defensive groups continue to lead, right? Here's your XLU on an absolute basis. The utilities above key support at the 58.50 level, continuing to grind higher above the 200-day moving average. Chaikin money flow is bullish for the group. And on a relative basis, you can see we've clearly broken this downtrend and we're in an uptrend now relative to the S&P 500, trading near 52-week relative highs against the broader market. So again, defensive positioning and lower yields leading to outperformance by real estate. I could have just as easily, leading to outperformance by Utes. I could have just as easily thrown real estate in here. We looked at real estate earlier, and you see a similar dynamic at play, a nice steady uptrend for a group that is outperforming the broader market. Staples continue to improve as well. Another area with defensive properties. Here's XLP relative to the XLY. And this is one we take a look at a lot, right? And you can see offense versus defense in the marketplace. Staples are outperforming, moving higher, right? So as the market grinds higher and then goes into this choppy trading range, the staples are exhibiting their defensive properties, especially when looked at relative to consumer discretionary. And the reason we think this trend could continue is because the RSI appears to have shifted into bullish ranges. So staples continue to improve against the offensive discretionary group. To me, that's another sign of defensive positioning in the marketplace, something to keep in mind. If you're looking at consumer stocks, you might want to skew towards the staples as opposed to the discretionary names, all else being equal. Technology is holding its relative breakout level, and this time we're looking at tech against the market. XLY relative to SPY, you can see we had a breakout and then a potential false breakout. We've now rebounded and held above the breakout level, above a rising 200-day moving average. So that is obviously a sign of an uptrend. Looking at RSI, we can see RSI has made a series of higher lows and now appears to be shifting back to bullish ranges. So if the RSI is shifting to bullish ranges, to me, that increases the odds that this outperformance is likely to continue. And then if we look at tech on an absolute basis, we can see a nice steady uptrend line, the uptrend off the late 2018 lows being respected here as the group consolidates on an absolute basis and looks to be moving higher. But what's interesting to me is that some of the shifts that have taken place under the surface within technology, software names have come under pressure of late, but semiconductors have picked up the slack. So that's kind of an interesting dynamic. So again, I always like to say, take your analysis one step further, right? A lot of people like to look at the market. I say, look at sectors. And then once you feel comfortable with the sectors, start drilling down within those sectors, right? Tech looks good, but what looks good within tech? Right now, it's the semis. It had been software. So it's always important to know. That's why we talk about strong industry groups. It's always important to know which industry groups within a specific sector are driving the performance of that sector, especially if you get to a sector that's like discretionary, that's very broad. Finally, energy remains a group to avoid. Here's XLE on an absolute basis, clear downtrend below the 200-day moving average. RSI firmly in bearish ranges. Notice how it cannot become overbought and routinely becomes oversold over the past year. That is a momentum confirmation to this downtrend that we're seeing in price. And if we look at energy on a relative basis, textbook downtrend, right? Continues to be a group to avoid across time frames. That's going to wrap it up. On Tuesdays, I publish my survival guide, your weekly action plan for surviving and thriving in any market. Head over to the site and check it out. I will be back here tomorrow.